All right, we are live. Friday, the first Friday of the month of February, and boy, are we off to a heck of a start. And I'm excited to be back for the Mike and Mario show. So Mario, how you doing, my friend?
I'm doing well, Mike, and hopefully you're doing well too. The
Yes,
world
sir.
is getting unhinged, I guess, as the guy from ex BlackRock guy said the other day. And we had the non-farm payroll number today, the
Hmm.
jobs data. It was a very good number, a
Yeah,
very good number.
the too good to be true number.
Yeah,
Yeah.
and one thing we noticed is that the Canadian employment number, it
Hmm.
was expected to drop by like 100,000, but it
Yeah.
dropped by 200,000. And I know it's a different country, but the U.S. is Canada's biggest trading partner,
Yeah.
and you would think if the U.S. economy is doing so well, the Canadian economy would be doing well as well. So I'm not really sure these numbers mean anything, but the what they've done to the markets is that the algorithms and the people in the markets that still believe in these numbers now think the Fed's going to hike 5 times this
Mm.
year,
Right.
and I think that's a dream.
Right.
Still, they could try to do it, but it's going to get ugly if they do that 5 times.
Right. I do agree. And speaking of which, let's just touch on uh, some of the details. Trying to mute this 1 second. I'll put this on screen here. But just go back middle of the week, we were kind of being warned that the numbers might not be all that favorable before today. But this is Jennifer Psaki's little press conference headline. White House warns that the current health situation spike could skew January job report. But as you just mentioned, something happened within that last 48-hour period to, I guess, encourage them to be more favorable with those numbers rather than the negative number we're anticipating, which I think would have it would have hindered that narrative of a recovery. And so, as you mentioned about, let me put this on the screen here. As you mentioned, the difference between the Canadian numbers and the U.S. numbers, here's a big significant difference, wouldn't you say?
Yeah, and I just saw an article in Zero Hedge. I didn't bring it up, but it said one of the reasons the January number was so big is that they use seasonal adjustments, and
Mm,
the adjustment was huge. So
yeah,
you could see this number in a year's time be revised down to like 100,000, but then it will
yeah,
be too late. Um, I think there's loads of revisions for last year as well.
yeah.
And yeah,
So talk about the revisions. So we have 467,000 jobs added as December revised, massively higher. Then you scroll down more, it talks about the BLS also devised December payrolls from 199,000 up to 510,000. And there's more. He said, as of the part of payroll of BLS's annual revisions, November was revised from 249 up to 647,000. So they were just going back and just revising
yeah.
everything. So, I'm trying to
But
figure out how do you pull
I
this
looked
off?
through though. If you scroll up a little bit, those numbers there,
Yeah.
yeah, it does. No, Zero Hedge focuses on the revisions upwards, but they had some big downward revisions out actually. So net, it doesn't really change anything. I think they revised down like 1 million some of
Hmm.
the months, and they revised up 1 million.
Yeah.
But what it shows these revisions is that can you really trust these numbers? I mean,
Right.
from
Right.
199 to 510.
Right. These are what I would consider. They're padding the stats in favor of the agenda they want to paint. So these numbers to me are bogus because when there's so much at stake, what truth can they really come out with that people would believe? They got to make everything look favorable, and I think this plays into more of their agenda of trying to really encourage the narrative that the Federal Reserve will definitely look to tamper down on inflation. Even though let's just jump into that. The what you call it the quantitative their accommodative policy rather, as far as their current bond purchases, whatever. And so you brought this to my attention about since the beginning of the year, we're still trending upwards, and they're supposed to be dialing back. So what really is going on? Like, so yeah, what can you believe,
Well,
man?
taper means that by March, they will be doing zero QE, so that
Mhm.
from March, this line is going to supposedly go flat. But right now, they're still doing like 100. I looked at from the beginning of January to the
Yeah.
beginning of February, they still did about over 100,000 in QE, and they said they're going to pare back the QE by 30 billion.
Mhm.
And so that would be from 120 to 90.
Yeah.
But it doesn't look like they're doing it, or they're going to stop abruptly in March,
Right.
or they're waiting for some event, some excuse. And of course, the general public and even people in the markets, they don't look at this like we do.
Right. Not at all. So you can continue to pump out the narrative of what you're going to do where you won't be questioned. Mainstream media is not allowed to question anything. There's always going to be that one or two things in front of us that they're going to use as a distraction. And it looks like the primary distraction amongst the mainstream circuit happens to be surrounded around Joe Rogan and how every single entertainer looking to deplatform themselves in protest until, Spotify does something with Joe Rogan.
It's really sad because uh, I don't watch Joe Rogan too much. My
Yeah.
wife actually likes listening to him, and he he doesn't say anything outrageous, and
Right.
he's got all the facts to back it up. They just don't like the way he thinks,
Right.
and he's not even like a Trump supporter.
Hmm.
From what I heard, he didn't even vote for Trump. If anything, he liked Bernie Sanders. So it's really weird
Right.
what's happening. It just goes to show that they're losing the narrative, the normies,
Right.
and
And that's the thing. He just asks questions. He's just, basically ask his guests questions and they have dialogue back and forth. And it's just interesting discussion. Now, it just happens it counters the narrative they want us to believe. But yeah, am I surprised? Not at all. But let's continue on talking about the central bank's plans to tighten. So here's an article here that I think is worth diving into because not only the Federal Reserve is now talking about what they're going to attempt to do, but then we have the other leading banks as well. So central banks to embark on the largest quantitative tightening in history. And so that's a very interesting phrase there because this is the first time in history we've had central banks that have all pumped so much funny currency into the system. And so it's like, okay, why now? What do they literally all have in mind? Because they're looking to withdraw at the same time, in a sense. And that's what's kept the system alive. So, are they trying to
yeah,
literally kill the system together or what?
yeah, and if you look at the all the central banks' balance sheet together,
Yeah,
um,
you got it right here.
it's much bigger now, and they didn't even really do much after the '08 crisis. They couldn't. They started unwinding the balance sheet. The Federal Reserve did,
Hmm.
and then you had the repo crisis in 2019, and they had to unwind all of that.
Yeah.
And this increase in the balance sheets, it's been over 2 years, and they're trying to convince us that they can do it now
Hmm.
right away. And when the Fed started unwinding the balance sheet back in, I think it was 2018. So
Yeah.
that was 10 years or 9 years after they started the policy of QE. Now
Right.
they're telling us after pumping trillions since 2020, they pumped a lot more than they did in from '08 to 14.
Yeah.
They're saying that they can unwind it all like in the next start already now,
Right.
even though they had to wait 10 years before.
Right. So there's been 9.1 trillion since the start of this pandemic, and they're looking to now remove some of that. And so, as you was mentioning about the Federal Reserve, here's that small little attempt at
Yeah.
withdrawing some of that. It was very small. It looks like the smallest out of all the central banks because everybody, dialed back. It looks like a little bit, but then again, it wasn't able to keep that going. So here we are now in circus land. But so we'll find out what happens. But once again, I think they're all on the same page because also along with this, it looks like all these central banks are also talking about the regulation side of things for the digital asset space. So they're coordinating on all these aspects here. at the same time, but I'm not sure who has confidence or whatsoever that they'll be able to pull this off because I don't believe they will. But
Yeah, someone
yeah,
I saw. Sorry,
go ahead.
to interrupt. I saw a tweet the other day that the central bankers and Morgan Stanley, people like that, their view that they can pare back on the inflation that they've
Mhm.
created, because it's inflation they created,
Yeah,
and unwind the balance sheet, raise rates. It's like the analogy is like Germany during World War II, when they're basically almost defeated and they thought they could still win the war with the
yeah,
Battle of the Bulge.
yeah.
So this is the Battle of the Bulge for the central bankers. And I don't know if you've heard of that battle. It
I
was
have not. No,
Yeah, it was like the Germans. It was towards the end of the war, and they had already landed in Normandy, the Allies, and the Germans went. They attacked Belgium. They're trying to get the Allies in Belgium, but they got creamed. In the beginning, they were successful, but they were like enlisting 16-year-olds. That's how desperate the Germans were at that
really.
time. So yeah, I think it's like the Battle of the Bulge for them.
Yeah,
And some people think it could be highly deflationary. I don't know. I think looking at commodities, I think it could, everything that we need to survive on is gonna go up.
yeah.
We could see the stock market, bond market, uh, trade sideways to down,
Mhm.
and we're not going to have the bull market that we had anymore. Could we see a crash in the stock market? Maybe, but
Yeah.
I still think tangibles is the place to be.
No doubt, no doubt. And I think especially this past week with what's happening with Facebook. So as we're talking about that, they're still having some issues. And I think that's 30 billion or so of Mark Zuckerberg's, personal wealth impacted. And then on top of that, 240 or 250, billion dollars of just investor
Mm,
assets that were wiped away. And
yeah.
so, of course, I talked about how there's a couple people in the hedge fund realm shorting that, so they've made some they profited off of it. But will Facebook be the leading? Will Facebook be sacrificed basically, or will they come in somehow, some way, and pump things back up, or are they sending a signal to Mark Zuckerberg because of something else? Who knows? But
I'm not. I'm not sure if there's something like that going on, because
yeah,
we've seen other companies like Netflix. Didn't
hmm,
they? Their stock price dropped quite a bit last week or something. Arc hasn't been doing well. I
right,
think this is a bigger thing
hmm,
going on here. I'll just hold on. I'll just bring up. Let me share this a
yeah.
second.
Somebody says Pablo says that Facebook is down 2% today and sinking.
Yeah, let me get you guys to see it. So here's there you go. uh so we're now at
Meta.
234. But you look back, it's still let's do the weekly one. Let's look at where it came from. So there's a lot of room on the downside. And let's look at Netflix, for example, because they had a pretty bad
You know
run.
what?
The Netflix that's rebounded, but now it's come back down. But it held that line. You see, I drew that
Yeah.
line. It held that line for now.
Now, you know what that resembles to me? It looks like the long-term chart of just the Dow Jones in general, minus that dip, minus that correction there.
Yeah,
And so we see that you can see clearly the March 2020 where everything was shut down,
yeah,
relatively speaking. And then, of course, we rallied like no other because of,
yeah,
the 4 or 5 stimulus packages and everything
yeah,
else in
yeah.
between that we don't know about. But imagine if and when, the
Mhm.
Wilshire 5,000 and all the other,
Mm,
smaller indices have a similar dip of that proportion.
yeah.
So some people,
This is the ARC fund here. You can
yeah,
see.
looking
So
at that.
yeah, it's not just Facebook
Right.
that's doing this. So
So do you think panic is setting in for a lot of long-term investors to where they're starting to now they want to adjust some things in their portfolio to where they're the ones selling, or is this the algos and all the other
well,
technical stuff on the side?
I saw
Ooh, yeah.
statistic earlier this week
Hmm.
that the outflow from the I think it's the oldest stock market index ETF, the
Mhm.
SPY. It's
Mhm.
an ETF on the S&P. They had the biggest outflow in January since it was created in the early 90s.
Really?
So yeah, people are withdrawing funds from the stock market. I think uh, even if there's still that 60-40 strategy of
Mhm.
putting 60% in stocks and 40% in bonds.
Mhm.
And I think that might change a little bit. We could see maybe they move to like 50% stocks, 35% bonds, and
Yeah.
maybe put some commodities in there as
Right.
well now, even though some mutual funds or pension funds don't allow for commodities. But I think it would be wise, and
Yeah.
especially with what I think it's been a watershed for bond markets this week,
Right.
because we had the ECB meeting yesterday, and they said they're gonna start unwinding their balance. Well, not unwinding, but they're
Mhm.
gonna stop QE, start raising rates, and we also saw the Bank of England saying the same thing, and
Yeah.
so there you go.
Can you read? I mean, just look at that that number.
Yeah, I
Rates
know. It's
expect ECB rate at 0. Like, that's like, an accomplishment to go back to 0. But that's going even that's going to be problematic.
Yeah, well, I think they've got 2 rates. One of them is at 0, and the other one is at minus 0.15.
Uh-huh.
But the bond market as well. The thing is, if they lose control of the bond longer term
Yeah.
yields,
Yeah.
uh, they won't have a choice. They'll have to raise
Right.
rates. And maybe with the euro, though, we could segue into what's happening with China and Russia and what they agreed to upon
Mm,
today. I think that
yeah.
was very significant.
Yeah, let me put that on the screen here 1 second, and then we can touch on that. So yeah, that's just more. Let me find it. Where'd it go? Here we go. I think this, and on top, I was listening as I sent you a little video clip. I was, listening to Xi and Putin, through their translators.
Hmm.
But they're meeting right now, or they met earlier today, rather.
Yeah.
But and so this was what was given as the first announcement of their, agreements to further their cooperation. So I think last year alone they were at 141 billion, and as of now they're attempting to get to 200 billion in trade. But what's interesting is they're not using dollars. And so everything else to this current moment is priced in dollars, but it looks like for this deal here, they're going to look at the use euros. And so that is more of the de-dollarization process unfolding, which, puts in jeopardy the petrodollar system that is already under attack anyway. But one thing that was mentioned in that little discussion was their desire to continue to reform the global governance system. And then right after they talked about the monetary order or some a world order, monetary world order or something like that. I'm thinking, oh, those are some
Oh,
big
did they
words.
say that? Really?
Yeah,
That's
those some big
interesting.
words they throwing
Yeah.
out there. World order. I'm
I
like, okay.
spoke about that today, and my videos are usually early, so my the topic was this meeting in my
Yeah.
video, but they hadn't come out yet. But what I think is significant here is the euro part as well, and
Hmm.
that shows me that the Europeans are. I'm not saying they're going to abandon trade
Hmm.
and cooperation with the United States,
Yeah.
but they're looking also to diversify
Right.
and especially Germany, the new chancellor of Germany, Olaf Scholz.
Mm.
He used to be the mayor of Hamburg, and why is that significant? Well, because Hamburg is the biggest port in Germany,
Hmm.
and they have a lot of ties to China.
Yeah.
So so what's going to happen is China sells a lot of stuff to Europe. They get paid in euros. They're going to take those euros and buy Russian gas. The
Hmm.
Russians are going to take the euro, put it in their reserves, and use it to buy European stuff. So it shows us that Europe is committed also to supporting this multipolar
Right.
world.
Right. Very
And
true.
yeah,
A-
and,
And it,
can the Americans go to war against Europe and China and Russia? That's going to be difficult.
right, exactly. And it looks like, so here's an article that, or this is an article I just found, but France is, heading to Russia and Ukraine to talk about all the tensions. So I see this type of move towards the east in favor of Russia because Erdogan was just there, I think, not just like 2 days ago, talking about how to resolve issues there. So there's more nations in Europe wanting to resolve this rather than go to a military
Yeah.
conflict. And so is that, so is the NATO / Western oligarchy shadow government, losing their control of their even their own allies, or what? So
I think so, because I also saw that China, Xi Jinping, one of the statements they made is that um, countries need to cooperate more,
mhm,
and that old alliances, i.e., like NATO, are not really shouldn't be used for aggressive moves.
right.
And yeah, and I think that's right. Why shouldn't we cooperate? I think NATO is like the last vestige of
The Cold War era.
The Cold War era, and that ended in the early 90s.
Right. And the fact they still have that union together, and the only enemy of that union happens to be Russia. So it's like, that itself lets us know that the agenda all along was to make sure
Yeah,
Russia was the instigate or
yeah.
used as an scapegoat. So it's like nobody really believes that anymore, but they still pushing it. And it's unfortunate. But
The other
oh
thing
man.
people don't understand sometimes is that, the old Soviet Union,
Mhm.
uh, split up, of course, and then split up into like the Baltic states, Lithuania, Estonia, and what's the other one? Lithuania, Estonia. I forgot the other one, but all the ex-Soviet states. There's 25 million Russians living in those places,
Mhm.
so I don't think Russian Federation wants to create another Soviet empire.
Right.
They just want to cooperate. And what they don't want, and I
Mhm.
know there was no treaty at the time. James Baker was the Secretary of State under George Herbert Walker Bush, and he met with Foreign Secretary at the time was Edward Shevardnadze of the
Mhm.
Soviet Union.
Mhm.
And what they decided is that uh, NATO NATO would not go into East Germany
Mhm.
because East Germany was becoming part of West Germany,
Yeah.
and the Soviets decided, the Russians decided to withdraw all their forces and troops from the Warsaw Pact zone, which was Eastern Europe,
Yeah.
and the understanding was that the Americans and NATO would not go put forces into the old Warsaw Pact countries, which they have, because
Yeah.
NATO now is in Poland and the Baltic countries, and they want to put. The thing is, they want to have NATO in the Ukraine, and to the Russians, that's unacceptable.
Yeah. So I see some thoughts out there, and I see a lot of people chiming in on the 10-year yield. So let's
Yeah,
touch on that. Let me put it on the screen here. So it looks like so I remember weeks ago, maybe beginning of January, some people threw out some questions. Do you see the 10-year reaching 1.8? Because that was when it was around 1.7, so right around here ish.
yeah,
And we were saying that definitely, yeah. But give us your thoughts on this bond sell off and why yields are spiking. And
yeah,
the whole year, I hear a lot of stuff about the yield curve inversion. I think it was the two.
yeah.
Let
210.
me see. Where we at? Let me see here. What's going on right here, Mario? 2 year.
Well, the thing is, let's look also at Europe, because yesterday, as I said, was a watershed.
Yeah.
You've had the German 10-year Bund, which is the equivalent of the treasuries. It's gone from being negative for the
Mhm.
last few years, and it's now at 20 basis points, as you can see there.
Yeah.
You've had the UK gilts going from like around 1% to 1.4.
Yeah.
And that's because that's because I think investors are losing confidence in the central banks because they don't see them fighting inflation.
Mhm.
All you hear them say is like the guy from the Bank of England yesterday, Bailey, said, "Oh yeah, we expect CPI to go to 7% this spring,
Mhm.
but in 2-3 years, don't worry, it's going to be at 2%."
Yeah.
Uh, and,
Yeah.
and I think that's what's happening. And in treasuries as well, today we've made a new high for the year in that 10-year yield
Yeah.
because of the strong, non strong,
The strong job
strong
numbers.
non-farm. Yeah,
Yeah.
and
Which is
the
bogus.
markets, the algos and Wall Street are now thinking, "Oh, the Fed is going to hike 5 times
Yeah.
this year, and they're going to really unwind the balance sheet." But yeah, so
Yeah.
that's why. interest rates have yields have gone up.
Yeah.
And
So
the curve, if you look at if you bring back that yield
yeah,
chart, if you look at the 2-year, let's if you scroll up the 2-year yield, where is it?
right there.
1 point.
1.3.
Yeah, so 1.3. So versus 1.93. So that's like 63 basis points the difference.
Mm-hmm.
I think that, as you can see there, up until October last year was at 0.2,
Yeah.
or even let's say the beginning of 2022, it was less than 1%.
Yeah.
And yeah, and now we're at 1.4. So the yield curve inversion, it means that if the 2-year yield gets above the 10-year,
Mm-hmm.
that will mean an inversion. And historically, that points to a recession. It happened in 2019.
Yeah.
And I think early 2019, the yield curve inverted. And
So
people kept saying, oh, it's not going to work this time. And it did, because we had a recession in 2020.
so what if they keep rallying together? Like, like to where they
Well,
never
then,
invert, but yet they keep rallying up.
well,
That's
that
still
just means
problematic.
that, yeah, that means that the investors still also think that there will be inflation, because the longer term yields are still going up. And yeah.
Yeah.
But the other thing they might do is run off the balance sheet, the longer term bonds that they have in the balance sheet, so that it's like selling those bonds, so that the yield in the longer end goes up, so that the yield curve doesn't invert,
Yeah.
which is just like cosmetic. It's
Mhm.
just like to give a signal that there's no recession
Yeah.
danger.
And then I noticed somebody says that the 20-year and the 30 has been inverted for months now.
Yeah, but I would say, that 20-year bond hasn't been around for that long, and
Yeah.
I don't think that's as significant. You need to look at the 2s, 10s,
Yeah.
because
Here's the
the
20.
2-year note is closer to the Fed funds.
Mm-hmm.
Yeah, I don't think it's relevant, the 2030s, to be honest.
But speaking of which, for those that are tuning in, definitely hit the thumbs up button, show your support for the channel. Throw out some questions. I see a couple questions. We'll get on those in a second. But before we move forward, we got another topic or two I want to definitely touch on. And it has to do with would you say they're stimulating you guys in the UK in regards to the cost of living, or gas prices, or energy prices?
Well, they've come out with this package,
Let me find that.
a boost to
Yeah.
help. And yeah, there you go.
Millions to receive £350 boost.
Yeah, and that's like per year, so it's pretty insignificant. So £200, they're gonna work with the energy providers so they'll credit your account.
Yeah.
But then I read, you don't have to read through it because I've done it.
Yeah.
But that next year they'll take it back, £40 a month. So they're giving it to you now, but taking it back next year. So it's just political. And
Yeah.
then the 150 is what they call the council tax, which is like a local tax on property. It's like a real estate tax. And it's not going to be for everyone. It's for houses up to a certain value.
Yeah.
I guess that will help a little bit. But the thing is, council taxes are probably going to rise a lot anyway. Um, I think the other thing as well, the general public, they don't understand inflation,
Right.
and they're clamoring for the government to help, even though it was the government
It's fault,
through
right?
their borrowing and spending since the 08 crisis that's created this. The more the government does to help, the worse it gets.
The bigger the problem, right? 100%. So let's get to some questions. So here's a question from T Mo. It says, question: will having a recession, I guess, be a good or a bad thing? So a recession puts the government and central banks in that much more of a tighter pinch, to where their response would end up being problematic for all of us. So we need this stuff to be wiped away, but yet no matter how it's done, it's going to be problematic. So good or bad, it's going to be bad regardless. however it unfolds, it's going to be bad because the response will be, inflationary, to where, everything that we worked hard for and look like to save in our currencies is going to be wiped away.
The
So it
thing
speeds
is,
it up.
for the last 20 years almost, ever since Greenspan
Mhm,
saved the, he cut rates to 1% after dot com bubble burst.
mhm,
Uh, Central bankers and governments, they haven't allowed uh, the economies to go through a deep recession. They're
mhm,
always trying to bail things out, stimulate fiscally and monetarily. That, unfortunately, I think the only way to cleanse the system is not a recession, but a huge collapse.
mhm.
Um, that's the only way, because it's a little bit like the analogy would be, you go to a party maybe once a month, and you enjoy yourself, have a few drinks, and that's fine. But if you keep going to a party every week and then having to take an aspirin to recover,
Mhm.
and you never rest,
Yeah,
at one point you're gonna collapse. But
right. And do
and
more
that
harm than good. That's for sure. Here's a question from Miles. Miles, it says, "What will be the effect of another stimulus going into the hands of the public, and what will, I guess, I don't know what that is. What was happening if that stimulus was 3 times bigger? What blick? I don't know.
what
Yeah, so
would
what blick? I don't know. I think it's a typo, but it says, what would the
yeah,
effect of another stimulus going into the hands of the
yeah.
public be, and what would be happening if the stimulus was 3 times bigger? What would happen if the stimulus was three times bigger? Basically, the consumer price increase would continue well beyond what it is now, to the problem where it would be quite obvious. Like, the
Yeah.
figures, they wouldn't be able to talk about 7%. How would they try to cover that up? Will they actually be truthful? Because it's going to be definitely in the mid-teens, which would mean that the true figure will probably be above 20, above 30. Like, it would be double that more than likely. So,
Yeah, and your Starbucks grande latte would be costing $15 or something.
right. And Starbucks even mentioned that they're going up on prices anyway. So, it's
I
naturally
I
all
I
the
got an
manufacturers.
an email from the Telegraph newspaper in the UK, because I
Mhm.
subscribed to it,
They're
uh,
going up.
and yeah, from £8.40 a month to 12.90, so it's gone
Mhm.
up 50%, the subscription.
Really. And so Amazon Prime is going up, I think 20%, if I'm not mistaken, from whatever they
Mm.
are. From It's going up, and so the question was, will people be still willing to pay that? And so more than likely, people will. But we'll see how it plays out.
What will happen is, people will be more use more discretion. There
Yeah.
won't be as much discretionary spending,
Mhm.
and or maybe some people will just keep borrowing and putting stuff on their credit card,
Yeah.
which I don't recommend. But
Rolf said will be 30% official inflation. Yeah, and I think that number, that's the official number, but they would never give us no number like that, like, because they're attempt to, fight inflation, the narrative that they want to use. They're gonna need a lot more than 5 or 6 hikes
mm,
to try to cover that one up. Harlow Real Estate says, "Aren't we in a recession? If the system does collapse, how will the people of the nation be impacted?" Ooh, so it would, if the how the people will be impacted. I think the credit market would seize up. The banks would have issues. Government would come out with some type of immediate response. Federal Reserve would probably want their CBDC issued. That type of problems
mar-
would be out there.
martial law,
Yeah, yeah, yeah,
because
definitely.
in '08, if you remember well, I think, when Lehman collapsed, the Congress tried to pass this Tarp
Hmm.
to save Wall Street, and it
Right.
didn't go through. And I think Hank Paulson at the time, he was the Secretary of the Treasury.
Hmm.
He uh, and some another politician, they went on the floor of Congress and said, uh, there would have been, if they didn't pass it again, that Tarp,
Yeah.
banks would have failed. People wouldn't been able to get cash, and they would have to go into martial law.
Yeah.
So maybe now I don't know if you want to play that clip from that guy from BlackRock, and he talks about that.
Yeah, give me 1 second here. So yeah, because I was gonna also mention Glenn Beck's little rant about the 29 trillion that we were that we were told a lie about. So let me actually pull this clip up here. I'll cut it all the way up, and so we'll see if you guys can hear. So, Mario, before we do, explain briefly who this gentleman is.
Oh yeah, he's a former executive director of BlackRock. So I checked, and he did work for BlackRock for 10 years. So he's legitimate. And you said Trader Steph.
Yeah, Trader Steph mentioned that he's legit. She validated him because I think this excerpt comes from a 20-minute or so interview on the Banner's War Room, or just on Rumble. Yeah. And he goes into things a lot more in depth in reference to.
Yeah, he sounds a little bit like us, and he's
a big money player. So I'll play this real quick.
The global debt bubble is at its peak, and it's becoming apparent, given what's going on across the globe, that we're at the end. And due to that fact, we're going to see lots of crazy things in the financial markets. I think we're going to see the credit markets become unhinged, the equity markets become unhinged. The Fed got a reprieve from COVID when they were able to, at the cover of COVID, print 65% more money to keep this thing afloat. But we're at the end days here, and a lot of what you're seeing in the response from global governments is what I believe is setting up a system to, under the guise of medical tyranny, to prevent the riots that are going to ensue once this thing all unwinds. That's my personal belief, and I watch what people do know what they say. The global debt.
So that's a little bit of hold on a second, cut this off. All right. So that's directly from someone who it happens to be well informed, who was a part of the .com as well as the great financial crisis, saw that stuff coming, and all that type of stuff. So yeah.
So I guess that's relevant to that previous question, what would happen.
Right. Exactly. All right, let's keep it moving. So CBDC will be their solution. Definitely. So speaking of CBDC, let me share with you a little bit of an article as to how the MIT and the Federal Reserve is making progress with their centralized cryptocurrency. So let me pull this on the screen here. But they're trying to tout how fast it is in comparison to Visa. But it says move toward digital dollar gains steam as Boston Fed says its prototype can handle 1.7 million transactions per second. So they're trying. Here's the selling point. It's faster than this. It can handle the load. So, and the question would be, do people actually think this is just something that has been developed, or this was ready all along? Would be the question.
Well, I think MIT has been involved with crypto
from day one.
Epstein as well. They're all involved.
Correct. So Michael Stagler, you name it.
Yeah. So it's not surprising. And the thing is, I read that article, and it said that it would be backed. This CBDC would be backed by the Fed. Mm-hmm. I guess some people still trust the Fed. I won't.
Right, but that's the thing. But if majority of the people right now don't have a clue as to what's going on, they'll think nothing of it if it's coming from the same source of the currency that they have now, because they don't realize the currency is a problem itself. So especially if we have that type of Mad Max scenario where it was just explained by Mr. Dowd, it'll be welcomed with open arms because of the sheer nature of the economy, to where people get answers.
And they've gotten young people and even older people. I've used cryptocurrencies, wallets. People are used to it now. So just download your Fed app, and register, and they'll send you a few Fed dollars.
Right. That's very true. So feel free to throw out some questions. We'll get it going. But also, let's take a look at the metals price right now. And so looks like we're in the green at this current moment after a slam down as usual. So that's the thing. Like every single day at around 9:30, 9:40-ish, when the COMEX opens, there's an automatic sell-off. Like, wow, it's right on time. It never fails.
Yeah, COMEX actually, the regular, they trade almost 24/7. They
Yeah.
trade 23 hours, but the regular hour in the US is at 8:20 New York time.
Hmm.
So around that time you always see gold and silver come off, and sometimes, like you said, before the stock market opens at 9:30, they slam it down, and they usually slam it down no matter what the jobs data
Hmm.
is.
Right.
They slammed it down yesterday as well, I think to 1788,
Hmm.
but it looks like it doesn't want to stay below 1800. So
Right. Now, I was watching a TA guy, the market sniper, one of his videos, I think yesterday. He was, showing some charts and doing some TA stuff, showing the bouncing of, the metals off the bottom trend line, and just saying that, I got bad news for you guys, but on the long side of things, it's going to be favorable. But pretty soon I see silver going to, I think he said 1830. And then if it gets, something else happens, it's going to 13. I'm like, damn.
well,
they can do it.
actually, he interviewed me yesterday,
Okay.
and we spoke about the dollar index, and I told him how bearish I was, and he was the other way around.
Uh-huh.
So yeah, I mean, that's why there's a market. Some
Mhm.
people buy and some people sell. He
Yeah.
could be right, but I just want to show a chart here before we finish,
Yeah.
because I actually tweeted this out. I'm gonna share this with you guys. Hold on. Just to show you, to give you an idea, because I know the general commodities are doing really well. Hold on. How do you?
And Fidel, those that are tuned in, definitely hit the thumbs up button, show your support for the channel.
Oh, I sorry, I
So
don't
you're
know.
good.
Oh, here we go. Is that it?
Nothing popping up on my side yet.
Oh no. Uh, fr Let me see if I can. Let's hold on.
No problem. No problem. No problem. Live
Uh,
by charts and die by charts.
yeah, hold on. Share screen window. Prompted.
I'll
No.
remove mine. You
What
should be able
about nothing? No, don't worry about it. Well, I will probably talk about it in one of my videos. So what I looked at is, like, for example, the CRB index, which is picking up quite a bit now. We've seen crude right today at $91.
Mhm.
But if you look at 2008, the CRB got up to like 600 something,
Yeah.
and gold got up to like 1,000. And now the CRB is still like not even back up to that. Actually, it's not 600; it's about 450 or
Mhm.
something. And now the CRB
Let
is
me see.
around 260, and gold is at 1,800. So actually, what I think is happening
Mhm.
is that commodities are catching up to gold, and gold's been waiting for commodities.
Yeah.
And so that's what we're seeing. And it's too bad I can't show you the CRB chart because it's looking really bullish.
Which one? I have the CRB index on the screen here.
Oh,
CRB index
yeah. Do
increased
a bit
29.
more long term, do a weekly chart, and
Let
go
me
back
see.
as far as possible. I can get my that one up. Hold on.
Here's the 5-year. Here's 1 year weekly.
I'll bring it up. I can bring it up if
Okay, go
you
ahead.
let's see, CRB
Mhm.
uh, index. Here we go.
Bye-bye.
Oh, here I've got it right here. So we're gonna share this now. Uh, Share screen, Chrome tab. Here we go. All right. So you see it here, right?
Yeah.
So you see there,
Sweet.
2008,
Yeah.
we got up to 477,
Mhm.
and that's when the year gold went to like 1,030. That was an all-time high
Yeah.
in March of 2008. And then in 2011, gold, when the CRB came up here to this level, gold went to 1,900. And now gold is still at 1,800, but the CRB is still down here.
Mhm.
So that's what I'm trying to say. If the CRB was coming down here and failed to break through this, then maybe I would agree with the market sniper that
Mhm.
gold would come back down. But what this is showing me is that we're going to get more inflation. I mean, it's not going to go up in a straight line. We're
Yeah.
going to get some corrections, but this looks very bullish.
Yeah.
CRB.
And I think I'm not sure the context in which he was referring to silver and gold taking a heck of a dip, but I think it was on some just a flat out outright sell off of the equities and everything
Yeah,
itself, like
I
some
mean,
type of
it could
systemic event.
it could be a matter of days or a week.
Yeah.
A bit like March 2020 when silver dropped below 12. It didn't stay there for long.
Yeah. And then we can't end without talking about, what appears to be doing well thus far. And that happens to be the crypto space. If I can pull it up here. Oops, wrong one. I want to do the bigger picture. But it looks like the crypto market is in the green. So despite what's happening in the equities markets, and especially with all the tech stocks, cryptos is not doing too bad. So once it comes up on the screen, I'll give it a second. But here we go.
Yeah, so Bitcoin is back above 40,000.
Yeah. And for some reason, I'm not getting all the cryptos. I'm just getting sold. And Solana, I'm sure you had to hear about the wormhole hack on the bridge to Solana. 200 and
Yeah, I've
something.
got it up here if you want to share it.
Yeah, go ahead. Because for whatever reason, I'm not getting the full thing.
Let's have a look here. Where is it? Crypto. So here we go. So yeah, Bitcoin up 8.5, Ethereum up almost 10%. I mean, yeah, very volatile. Who knows what's happening? We were down to 32 the other day, and now we're at 40,000. So it's a good store of volatility.
Yeah, but there's some happy people out there, of course. And I know all the crypto channels are excited and talk about this is the rally, get ready. It's about to, okay, sure, we'll see. But so as always, man, it's good to connect with you. For those that are not familiar, Manico64 on YouTube, go check them out for sure. We do this every Friday midday. It's always good to put like minds together and try to figure out what's going on in this crazy world. But so we're at the beginning of February, looking ahead. What are we expecting further? We got the Truth Social. I guess Trump's little platform is supposed to be rolled out sometime this month, so we'll see how that responds and if there's any backlash from that, because I'm sure Joe Rogan's going to go over there and everybody else, and Facebook is already experiencing pressure because a lot of people are leaving. Let me see. I'll show this real quick. Dang, where we at? Facebook loses users for the first time in its history. So
all right,
they're leaving and going somewhere. So, but anyway, it's always good to connect with. Any last thoughts you want to leave us with, Mario?
Yeah, just keep your head down and try to avoid the mainstream media, and try to get out of debt. A lot of people used to ask me, "Oh, with inflation, it writes off debt."
Mm-hmm.
Yes, but if you have a big mortgage now and all your bills are going up, don't you wish you had no mortgage? Because then you could,
have more disposable income to live your life and to
try to get out of that.
Right. Understand. So definitely we know that moving forward, the narratives will change weekly in accordance to what they need to pump out there to scare us, as well as try to keep our attention off the real world issues. But in the meantime, we know central banks are still buying physical gold, and it's going to be a mad dash to secure all the daily necessities you need. So, stay ahead of the curve, buy a little bit extra of things you're going to need. So, yeah, but we already know that. So we're a well in tuned audience here. But as always, be blessed, be safe, and we'll be back at it next week. Be blessed. Peace.
Peace.